Mr. Jeffrey Seal. He's with Groundfloor. Really excited to have him here. You want to tell us about what you got here? I know Groundfloor is interesting to me.
Yeah, absolutely. So yeah, it's going to be relatively informal. So if you guys have some questions around it, happy to take those. But yeah, so Groundfloor, first and foremost, wasn't created to be an origination platform. It was actually created to be a public investment platform for people investing, just investing generally at the onset. We're about 10 years old now. And what we do is no different than what E-Trade did back in the 80s and what Acorn does now, right? We created a public investment platform for people to invest. The only difference is we don't do it in bonds, stocks, ETFs. We do it in real estate. And so on top of that, what we also did is we've gotten the appropriate licensing requirements through the SEC that allows us to onboard non-accredited investors to invest in real estate, which is why the entry point is so low. So that's why we're all the way down to $10. We've had discussions about $1. And so there is no specific net worth requirement for you to jump on the platform and start investing. And so that's the premise, right? So for that to work, you have to originate loans and you have to put product out on the investment platform. So we initially fund it, to be clear. So it's not a crowdfunding mechanism, though that's the best definition for it. That's not actually what's happening. We actually fund the deals on our side. They go through the SEC, they qualify, then it goes out to the investment platform. And then people, as I said, for as little as $10 can jump in there and participate in what we call LROs, which is a limited recourse obligation. And so you'll have thousands of investors invest all in one property. Okay. So even when you go into the platform, again, you're not taking down large portions, unless you want to, large portions of one property, you're diversifying that across hundreds of properties at any given time. So that is Groundfloor at the high level, and is for sakes of what they created it for. But again, in order for that to work, you have to originate some loans. And so the type of loans that hit that platform is tried and true hard money loans. It's purchase and renovation. It's short term. That's why our platform sees 10% returns in a matter of 12 months, right? So that is what you're investing in on the front side, and it's what we're originating on the back side. Okay. Some of the unique things about Groundfloor. So we try to pass on what benefits we can that come off that investor platform. So for example, when you invest, you don't expect payment on a monthly basis. You get paid when the property dispositions. And so if you've got $10 in a property and it pays off in 6 months, that is when you get your money back, is in 6 months. It's not paid out on a monthly basis. So we roll that benefit over to the client on the borrower side as well. So every borrower, every deal that we fund has no monthly obligation, or no monetary monthly obligation. There's no payments being made on your loan. So which is beautiful. Like cash is king, right? There's nothing worse than writing a $2,000 check on interest only. So you can wait 30 more days to write another $2,000 check that's interest only. So we don't require that of our borrowers. We just allow it literally incrementally increases the loan amount day over day until the point of payoff. So when we fund a loan, we don't fund it and roll in a bunch of payments. That's not what we do. We fund it, and day one after it closes, that interest just starts to accrue. And so when you go ask for your payoff, that is when you actually pay your interest. So again, huge benefit. It allows you to focus in on what's important, and that's the project. It keeps money in your pocket as you move forward and find these change orders within your budget. So super helpful. One of the other benefits we have is we allow origination points, both broker and just our origination points. We finance those into the loan. So there again, recognizing that cash is king, we try to reduce your costs day one as much as we can. Because we also recognize we're not the cheapest when it comes to points, and I'll explain that in a minute. We reduce it as much as we can by financing those into the loan. So your out of pocket that first day at closing is as low as we can possibly make it. So another nice benefit there. To get back to why the origination points are what they are. So what's beautiful about the investment platform is it's free. Okay, there are no costs for you to play on the investor side. Right. So if I originate a loan at 10% on the origination side, when it hits the platform, what you're going to get if you invest in that project is 10%. So that doesn't change. So we live and die by our origination points. So we're going to be on the higher side. We're going to range anywhere from 3 to 4. Right. And that's because that's the only thing that we charge as a company. And that rolls over to the benefit of the investor platform. So that is that. We do new construction. We do use typical purchase and renovation or rental stabilization loan. We do refinance renovations. We'll do heavy rehab. We're in 32 states. And so we cover a lot of space. So that's Groundfloor, high level. Happy to take any questions if you've got them.
I love it. Jeff, that's I think it's just a fantastic platform. When I first heard you back several months ago, I was just really excited about it. I thought, well, this don't even sound right because I've never heard anything quite like this, but I think you really are groundbreaking, as far as the ground floor is. I mean, anything like this, it just offers a lot of people opportunity that may not have one.
Right.
On either side.
Yeah, I mean, sometimes, the entry point for real estate is sometimes pretty high, right? Whether you're doing it through other platforms that require you to be a accredited investor, that means you have to have money. If you're wanting to actually borrow and do your own transaction, got to have money there and some experience. But man, if you just want to make 10% return on your money, put it on the Groundfloor website, on the Groundfloor platform. We also, it's worth talking about, we launched an app called Stairs a few months back. John, have you played with that at all?
I have not. No, I'm
okay. So
I'm gonna find out.
Yeah. So obviously, the reason we created Stairs, to be honest with you, is we're trying to increase the capital we have at the ready in order to fund the deals that get us to the point to put them on the investment platform, right? That's the premise of the creation of Stairs. And so what Stairs is no different than some of those other high yield savings accounts you've seen. So you can earn anywhere from 4 to 6% just by parking your money in Stairs. Okay. It doesn't really, it's a Groundfloor created product. It doesn't tie into what we do on the investment platform because that's, 10% earnings, that's secured by real estate. And it's secured by real estate, by the way, by debt, not equity. So you are a bank. That is the securest way to get into real estate. So that's a pretty secure platform. But Stairs is, it's unsecured. It's just a high yield savings account, right? And so again, very, very liquid. That nothing has to pay off for you to get your money back. Money flows in and out of that pretty easily, but you can earn up to 6% through Stairs. So that is a recent app that we've launched.
How do you spell that, Jeff?
Just like climbing stairs.
STLREIA.
Okay,
great.
Yeah, and that's being updated constantly.
Yeah. Okay, that's great. I love that. Yep. Yeah, real nice platform. You've made it so user friendly too, I might add. I mean, you can go look at the deals, and it's actually, we were in there yesterday, my wife and I, because I actually got paid off on another $50 little loan I did on one this week too, and so we had some money to spend, so we went and we just kind of played around with it, look and see where the opportunities were. I mean, I think this time we went in Georgia on a couple of different things, but I think we did one on Florida, and they're all over the place, but it's really fun to see. And you can look at the experience the people have too. I mean, you can see what previous deals they've done. And just, I know for me, it kind of gave me some ideas on what we're looking at with some of our rehab projects, and just ways to present those. So I really like it.
Yeah. So with the SEC, so there's specific information we're required to share, and one of them is experience, right? So you know what you're getting into, and again, I did it wrong the first time I did it. I think John and I talked about this. I had money and I put it all on one project, and it's because I knew that project. I knew the broker, I knew the borrower, I knew the area, had a feeling for the property. I mean, it was absolutely insider trading. There's no better way to explain it. But I would never do that again because it gets nerve wracking when you hit that 12th month and you haven't gotten paid back. But what's great about, and John talked about this, is if you go in and you use the investment wizard, and it'll essentially say, hey, I want to invest in everything at 10% or everything at 12%. I want to invest in everything at 8% because that's theoretically a lower risk category. It puts it in all the properties. And so you'll get pinged a couple times a week. Hey, you just had an investment payoff. Hey, you just had an investment payoff. And so it's actually very entertaining to get those texts and those pings. It's pretty satisfying, as you can imagine. But yeah, it's a fun way to steward your own investment, so to speak. And what's great as a borrower, and it all depends on how cash heavy you are, if we finance a transaction of yours, there's nothing stopping you from taking more money, putting it on the investment platform, and earning interest on your own deal. So you could actually earn back interest that you're being charged by taking that approach.
Oh, wow. I never would have even thought about that. That's a great strategy right there.
Invest in yourself, right? So,
Wow.
mhm.
I'm gonna have to look at that now.
Yeah.
We've
Yeah.
always been paying cash for most of our projects, but this might be a good alternative there. I like that.
Yeah. Yeah, absolutely. Happy to talk through one of those with you when you have a moment.
Wow, that's some really insider trading, it sounds like.
I mean, it can't get any more inside than, yeah, exactly. Exactly.
I don't look good in orange.
Yeah. Well, my wife says she don't look good in orange, so she likes playing by the rules. And I like these rules.
Yeah. Yep. I would agree.
Yep.
Agree.
Ask him how it gets your property in there. If you want something. from it.
Now, now as far as is getting involved here, I have a referral link, and like I was telling Lloyd earlier, I'll go ahead and put mine in there, and then anybody that would sign up through our group here, of course, we'll give that to them. And that's one of the things I liked is you do have it referral friendly.
Mhm.
As far as getting your properties on there, you have an application process, correct?
I
And
do.
it's pretty user friendly from what I've seen.
Yeah, it is. So the software on our side is not nearly as robust on as it is on the investor side. But yeah, the portal and the interface you have directly with the website, that's really just to gather the application. I mean, we still do things kind of the old way, right? We always want to communicate on the deal first. I never want to just take an application and get down the road without actually pricing something out for you. And this industry is just, there's enough caveats to throw you off that it's worth having a conversation, or at least having an assigned business development manager walk you through the deal first before you submit that app. So if you've got one, shoot me an email. I'll put you in contact with one of my business development managers. They'll immediately either call or email you, with 5 or 6 pieces of data. We can price a deal out, make sure it makes sense, make sure you understand the benefits or even lack of benefits with our specific loan as it compares to another one. And we're off and running there. From an origination side, since we're talking about that, one of the things that we do, again, it's asset-based lending. We try to make it look like that as much as we can. So we don't look at bank statements unless it's a new construction deal. I don't care about tax returns. I don't care about debt to income ratios. If you say you're going to bring 15% of the deal or 10% of the deal, I believe you, right? And I'm not looking at interest reserves because I don't take payments, right? So we solved that problem. I couldn't take payment. We're not set up to take payments if we wanted to. Couldn't do it if we wanted to. So a couple of extra benefits there. We don't do appraisals. Okay. We internalize the value. So we'll have an inspector look at the property, gather some photographs, give an idea what condition it's in. We have someone look at your budget to ensure it's feasible. So, I mean, that's a benefit there. You have a third-party person taking a look at your budget to ensure you didn't miss anything. If you did, we'll let you know. We'll make you add that to the budget, and then we'll determine value internally. And that process is way faster than waiting on an appraisal.
Wow. Yeah, it sure is. That's just fantastic. I love the way you have this all, basically figured out to where it's smooth.
We try. I mean, the first one, I'll tell you, the first one never feels smooth. But once we figure out each other's pulse, it goes pretty well. I mean, we're very, very proud of the return business that we actually do get. So.
Mm-hmm. Yeah,
Sorry, I was a little late. And do you have a website, or can you put a website up that I can kind of
for the investor side or the borrower side?
Here's the investor.
Both actually.
Okay. Yeah, there you go. So that's, yeah.
Can you put your contact information in there, Jeff? Whatever you would like to share with us. I put the referral link in there, so the ground floor, you could just you can kind of go look at that. I know on our side you can start off. I think it was $100 you can open your account with. To get started, I threw a few $100 in there and just played around with it and spread it out, kind of like we just kind of talked about. Some as low as $10, but I mean, they paid off well. Mine paid off way earlier than what they anticipated, which was kind of unusual in a lot of times when you're investing money. It was like instead of 12 months, it was like 5 months or something like that. So.
Yep, it's true. I mean, that's that's a good thing. Trust me, if you invest in the entire portfolio, you will have some go beyond 12, which is actually, you want to get concerned about it, but that's actually when default interest starts to kick in, you make a lot of money because they'll still typically pay off.
Yeah.
So it's actually, having a couple in maturity is actually a pretty good thing for an investor.
Yeah.
Yeah. I did post my contact information. That's just my direct email. Groundfloor.us. That's the website. By all means, poke around in it. There's more info on the investor side on that. The site's really not geared to drive, business on the borrower side. And so if you want more information or insight there, there's definitely more to be had with our team of business development managers.
Mm-hmm. Very nice. Thank you.
Yeah.
Yep.
I had a question, Jeff.
Yes, sir.
You mentioned that STARS program. Is there any minimum investments to park your money in that STARS?
Oh, it's a solid, great question. I don't think so. I don't think so. So the way to, so I think just to put money in there, I think has a 2% rate of return. If you set it up for it to like, I think you can set it up on a roundup function and an auto, like, if you want to set it up, it automatically puts $5 in every 2 weeks. If you set up the auto, and if you set up a roundup option or something like that, I think it jumps up to 6%. But I don't think there's a minimum.
Okay.
Yeah, I don't think there's, because that's not, there's not nearly as much rigor around, licensing requirements and things like that when it comes to the STARS account.
Okay.
But yeah, and that is that by the way, that is just an app. That's strictly designed to be an app. And Groundfloor has an app as well. Yes.
Hi, my name is Christopher. I've been investing with Groundfloor for about a year now. So whatever is what people should know that. So.
Oh, awesome. Great. Thanks. Is it going well?
Very well. Actually, it's been rising from about 10% to 11% now.
Yes.
So the interest rate is gradually going up, and I started a Roth. I have both investor and the Roth account. So
yeah, you can tie. Yeah, so you tied an IRA account into it.
Yeah.
Yep.
So I have both Roth and a regular investor account.
Awesome. No, thanks for bringing that up. So you brought up the interest rate increase. So it was so interesting when Fed started increasing interest rates, that actually doesn't affect us from a borrower side. It doesn't, and I should say that it doesn't affect us directly. It does affect us indirectly. And what I mean by that is our money doesn't come from institutions, right? It comes from people like us on this call. And so if Feds increase interest rates, we're not getting money from institutional investors that are increasing rates on us, which cause us to increase rates on borrowers. We don't do that. But what does happen is our platform becomes less interesting because you can go out and get a corporate bond for 8% or whatever that is guaranteed and backed by the government, right? So if we have deals out on our platform at 8 or 9%, why in the world would you invest on that? Because there is some inherent risk that's higher on our side of the platform compared to a guarantee through a corporate bond. And so in order to ensure that we still look attractive, we increase interest rates to make sure we show that, and we appropriately identify what the risk of our product is. So it was just interesting to watch those types of increases still happen to our borrowers, but for different reasons. It was to ensure that our investment platform still looked attractive and made sense based on the risk compared to what other things were out there for you to invest in.
No.
So borrowers got hit. Yeah, borrowers ended up with an increased interest rate, which pays off well for the investor.
I think Dennis asked here in the chat here, what is your default rate?
Oh, so it's going to be pretty typical hard money, right? Now, when you say default, are you asking how many times I actually take a property back? Or because default, it could be that. So default rate got really high for hard money, generally speaking, over the last year and a half because of supply chain issues, permitting, things like so. Default could also just be a matured loan that's over the 12-month or 9-month duration of the original loan agreement. So defaults got really high. And so we've done a lot of things to offset that, because that doesn't mean it's a bad loan in that scenario. As far as foreclosure, it's pretty darn low. I mean, we're really not set up to take property back. So in every instance we can, we work with that borrower to fix it. It's okay. So default. Okay. So thank you for the clarity. It can happen. I think it's about a 0.5% chance that it's going to, where you don't get your pay, where you don't get the money back. What happens more often is you just don't get the interest that you could have made. You get your principal back. We almost in every scenario make sure that takes place, where if you've invested in 50 different properties, you have one of them that goes sideways, you just don't make any interest on that, you get your principal back. That's happened. I think we've had now, I can count on one hand how many scenarios we've had where there was a principal loss. Again, we try to ensure that doesn't happen, but even in a principal loss scenario, that's on one project. So you're overall, you still made money. It's just that was a bad stock, right? That one didn't go well. But it is a pretty low number that takes place. I want to say the last figure I saw was under 1%.
Mhm.
Pretty darn low.
Mhm.
That's a good question.
Mhm.
I mean, it's real estate, right? There's inherent risk with it, but it's debt. So we're the first ones to pay back.
Way better than the stock market. I'll have to say
I would agree. I would agree.
At least you got some control here. And
Yeah, it's real, man. I mean, I agree. There is quite a bit more control.
Mhm.
And
Yeah,
it's easier to understand, right? It's something we all have a grasp on, is real estate. Like, I get it.
Right.
And if you just want to invest in St. Louis, or if you want to invest in a very specific pocket of the country, you have that ability to do that.
Mhm.
Great.
Yep. Mhm. Well, that's great, Jeff. I appreciate you sharing all this with us today. I think some of us here will probably want to go check out the website and check it out a little bit more. We've recorded this, so we will share it with the larger group. We'll put it on our website there, and you may get some more inquiries here. I think you did a great job explaining it all, though, because it is so straightforward and so simple. I mean, that's what impressed me from the beginning, just how simple it was.
Absolutely. Now, there's a lot of work goes into making sure that is in fact the case. It's way easier to invest than it is to actually borrow. That's for sure.
Yeah, it's very simple. I'll tell you that. It didn't take long at all. Just connect it and get, funded, and then actually get paid. I was impressed. I didn't expect to hear anything for a year. Just like
Make sure you reinvest that. When you get that, when that comes back, that's your signal. Yeah, you got to send it back out.
Yeah. Oh yeah, that's already done.
Yeah.
Absolutely. Yeah, I was so impressed. We didn't even wait. As soon as I got the email saying it was funded, got right on there.
There you go. We appreciate that.
Yep.
That's the power of compounding.
That's right.
In real estate, if we've been in it for a long time, like a lot of us have, we realize that's a factor in your investments.
For sure. Great. Well, that's all I have, guys. Thank you.
Thank you so much, Jeff. I really appreciate it.
Yeah, absolutely.
All right.